Hello, I'm Terrel Platt with the CattleFax Closing Bell. Today's Closing Bell is sponsored by Zoetis. Performance Livestock Analytics helps you measure what matters on your cattle operation by helping you make easy work of record keeping, feed info, health data, financial records. It's in the cloud, ready and waiting. Need it now, later, 2:25 in the morning, anytime, day or night? Just open the app, look at the trends, discover opportunities, simplify your data. Numbers are kind of our thing. They can be your thing too. That's Performance Livestock Analytics and their strength in numbers. Request your free demo at performancelivestockanalytics.com. The Composite box beef cutout has yielded surprising resilience in the month of June and beginning of July. In the month since reaching the June 10th highs of $267 per hundredweight, the cutout is only trading $4 per hundredweight lower as of Thursday. Compare that to the price decline from April highs of $270 per hundredweight to the May lows when the cutout dropped $17 per hundredweight over a similar time frame. The cutout has been supported by higher fed cattle prices as aggressive marketings have kept the front-end supply more current. This has led to decreasing carcass weights and declining quality grade, especially in the north region. Demand remains below year-ago levels, but has shown signs of stabilizing over the last 2 months, and is higher today on a weekly average basis than at the same time of the June highs. The cutout appears much less impulsive than either 2020 or 2021, despite the lower demand levels. Nevertheless, July tends to be one of the weakest demand months of the year for the beef complex, as grilling season fades and beef buyers tend to show limited interest. The seasonal tendency does not favor the cutout moving higher into July, but it may be able to find support above the 250 mark. If the cutout does break below 250, risk back exists in the low to mid 240s. Longer term, the greatest risk to the cutout will be inflationary impacts on demand, as high prices for food, fuel, and housing place particular pressure on consumers. However, tighter fed and feeder cattle supplies are on the horizon, which will be supportive to the beef complex. In this week's markets, moderate to active fed cattle cash trade occurred in the north at 144 to 151 live, mostly in 230 to 238 dress, steady with last week. Moderate volumes traded in the south at mainly 136 to 140 live, steady to $2 higher than last week. The CME feeder cattle index is set to close $2 softer on the week at 163. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.